Hello everyone, a very good evening. Welcome to Oliveboard. Today we are going to start with the unit 10 of module B for our BRBL CAIIB Foundation July 2025. We have already completed till the unit 9 of module B and all the videos are available on the YouTube channel. If you haven't yet seen them, make sure that you watch them because they are very important for your exam point of view. These are the summarized versions, and you will get an idea of all the important topics, all the important concepts of this chapter. So, today we are going to start with the FEMA Act or the Foreign Exchange Management Act. If we talk about a bit of history, so earlier to the FEMA Act 1999, the FERA Act was governing the foreign exchange. It was the Foreign Exchange Regulation Act. So, it was the Foreign Exchange Regulation Act, FERA, which came in the year 1973. But it was felt that this act was quite stringent and it came in the way of making India more liberalized, which was the aim for a more globalization developed economy. So this was repealed. Why it was felt? Because it was too rigorous and had outlived its utility. So it was replaced by the FEMA Act in 1999, and its aim was to consolidate and amend the law relating to the foreign exchange and objective of facilitating external trade and payments. The most important point. The Foreign Exchange Regulation Act was regulating it or controlling it. There were a lot of controls, restrictions on the foreign exchange, on the FDI and FPI. These were made flexible, these were made easy with the FEMA Act to facilitate the external trade and payment and for promoting the orderly development and maintenance of foreign exchange market in India. Consequent to the globalization and liberalization with the LPG reforms of 1991. Plus, there were various other issues like the current account convertibility was not there, and our foreign exchange reserves were fast depleting, because of which the Narasimham committee uh, and various other committees, they gave their recommendations, right? And the LPG reforms, with that the FEMA Act was also enacted. Now in this chapter we are going to see the various provisions of the act which extends to all over India. Now there are certain terms, important terms, which are used in the act, like the authorized person means any authorized money changer or dealer, offshore banking unit, or any other person which is authorized under FEMA to deal in the foreign exchange and securities. The FEMA Act says that no person can directly involve or exchange the foreign exchange without the involvement of the authorized person. We will see whether this authorized person, who is this entity who appoints the authorized person, who has the rights for the supervision and control. So any authorized person, the money changer or dealer, who are given the authorization to deal in foreign exchange or securities. Then two important concepts, the capital account transaction and the current account transactions. One thing that will make the definition or meaning of both of them clear: capital account transaction, where the asset or liability situation of the nation changes, and current account transactions, where there is no change in the asset or liability. This is the only thing that you need to remember from here. Capital account transaction, any transaction by which there may be a change, either an increase or decrease in the assets or liabilities outside India of the persons resident in India, or assets or liabilities in India of the persons resident outside India. If any change is happening in the asset or liability situation, then it is a capital account transaction. And current account transaction, wherein no change occurs, like payment which is done in the ordinary course of business of services, short term banking, then interest and loans, income from investment, then remittances from people who are living abroad or remittances out of India, expenses in connection with foreign travel, education, all of these. Then there are certain other terms like currency. It includes all the currency notes, postal notes, money orders, checks, drafts, anything that may be notified by RBI. Foreign currency refers to any currency other than India. Foreign exchange means when we exchange one currency to another, like what is the value of $1 in rupees, whatever the current amount is, that is foreign exchange. The amounts that are payable in foreign currency. Then security, the regular meaning of security, like the shares, stocks, bonds, debentures, right? Then important thing is the person resident in India. There's a very huge difference between a citizen of India and a person resident of India. And the FEMA Act is only concerned with the person resident in India. So you need not worry about whether the person is a citizen or not. They should be a resident of India, and then the provisions of FEMA will apply accordingly. So any person who is residing in India for more than 182 days in the preceding financial year and their economic interest is in India, they're residing in 182 days. Plus, they can be any person or body corporate which is registered or incorporated in India. It can be situated outside India. Then, any office, branch, or agency owned and controlled by a person resident outside India. So, person resident outside India, but they're controlling office, branch, or agency in India. And any office, branch, or agency which is outside India but it is controlled by a person resident in India. So when we talk about a person resident in India, it is going to include, let us say, it is not going to include any person who goes out of India for taking employment outside India or carrying any business or vacation outside India, vocation, right? Then any person, if they're coming to India, although they are staying for more than 182 days, but their economic interest is not in India. Like for, let's say they are coming here to travel for visiting, right? So they will not be included as a resident. They will be included as a resident who come to India, stay in India for taking up employment or any business or anything which is accepted by the government, right? So any person who is resident outside India means any person who is not resident in India, NRI. These are the definitions given under the Act. Then if we talk about the regulation and management, so no person shall, which is given in chapter 2 section 3, says that no person shall deal in or transfer any foreign exchange or foreign security to any person not being an authorized person. All right, so only this foreign exchange can happen, dealing or transfer of foreign exchange through the authorized person. Then they cannot make any payment or credit of any person resident outside in any manner, make, they can receive otherwise to an authorized person any payment or by order, or they can enter into any financial transaction. So these regulations says that the transactions, transfer, payment, everything should be in accordance with the FEMA Act, and this is given in the chapter 2 section 3. Otherwise penalties will be imposed, right? So if a person who is resident in India and they're receiving any payment on order or on behalf of any other person, then it should be through the authorized person only. So this is the meaning of the statute or the provisions given in the FEMA Act. Now when we are talking about these authorized persons, so who has the power to appoint these authorized person or to inspect these authorized person? This is with RBI. So RBI is going to appoint the authorized persons who are going to deal in foreign exchange, plus the inspection will be also conducted by RBI from time to time. Then another important provision when we talk about is the penalty. So the penalties including the right of arrest and detention is given under section 13 of the Act. Very important. The FEMA Act says that if there is any violation of the provisions of the Act or any rules or regulations or contravention is there or anything, then this person, when we talk about the penalty, then this person will be liable to a penalty up to thrice the sum involved in such contravention where the amount is quantifiable. If the amount is quantifiable, it can be calculated, then thrice the amount involved will be imposed as the penalty, or up to 2 lakh rupees where the amount is not quantifiable. So both the terms are important. When quantifiable, thrice the amount; not quantifiable, up to 2 lakhs will be the penalty. Plus, if the contravention is of a continuing nature, not once, but it is continuing, going on for many days, then this penalty may extend to 5,000 rupees for every day after the first day during the contravention continues. So, this penalty will be increased. If it is of a continuing nature, it will be increased and it will be imposed on every day. That can extend to 5,000 rupees. All right. So this is the first provision under section 13. Then if we talk about immovable property, if any person is acquiring immovable property outside of India of the aggregate value exceeding the threshold which is prescribed, very important, these penalties or these arrests will not be imposed if the amount which is aggregated is not more than the threshold. So the persons, people in India, outside India, they can participate in foreign exchange, and the penalties or law will be applied only if it is beyond the maximum limit. Right? So let us come back to the provision. It says that if any person is said to have acquired any foreign exchange, foreign security, or immovable property exceeding the threshold limit, then the penalty will be up to 3 times the sum involved. Plus, when we are talking about immovable property, so let's say a house has been acquired by a person in Japan and it is beyond the threshold level, then confiscation of the property of the same value will be done in India. So if this person who has acquired the property in Japan, they also have a property in, let's say, Gujarat. So the property in Gujarat will be confiscated by the government of India. This is also a provision, right, related to the immovable property. Then if the adjudicating authority, only when we talk about the cognizance of the cases, when will the court accept the cases, it will be done only when the adjudicating authority, they are recording the reasons in writing. They may recommend for the initiation of prosecution. And then if the director of enforcement, this is a body which is appointed by the central government to foresee the enforcement and working of the FEMA provisions. And then when the adjudicating authority, they with the reasons in writing, they recommend the initiation of prosecution. And if the director of enforcement is satisfied, then they may direct the prosecution by filing a criminal complaint against the guilty person by an officer not below the rank of assistant director. So 3 points are given here. First, the complaint will be given in writing with the reasons, by whom? By the adjudicating authority. Then the director of enforcement is going to take cognizance of the complaint that has been filed up against the guilty person, and then they will be filing a criminal complaint. And this criminal complaint will be filed by an officer not below the rank of assistant director. Not below the rank of assistant director. So three important points are given regarding the adjudication. And obviously, like any other statute, there's also the right to appeal. The right to appeal, right? So if any person is aggrieved by the appellate order, then they can appeal against the order before the appellate tribunals which are established for this purpose, right? So this is there, which we have already seen. If any person is found to have acquired foreign exchange, foreign security, movable property situated outside of India of the value exceeding the threshold prescribed, then penalty will be imposed, as we have seen, thrice the amount or 2 lakhs rupees or of the continuing offense. Plus, they will be punishable with the imprisonment for a term which may extend to 5 years with fine. Why? Because it is a criminal complaint which will be filed. So the criminal complaint is going to raise a imprisonment term as well, which may extend to 5 years. Then no court, we have already seen, shall take the cognizance of an offence of section 13 except as on the complaint which is given by a writing by an officer not below the rank of assistant director. All right, written complaint made by the adjudicating authority, and this officer should not be below the rank of assistant director. All right. So then we used the term, we mentioned the term Directorate of Enforcement. Who establishes the Directorate of Enforcement? The central government, with a director and other officers called the officers of enforcement. This Directorate of Enforcement and the other officers of enforcement, again, they should not be below the rank of an assistant director. They can investigate the contraventions of the FEMA Act, as well as they will see the enforcement of the rules and regulations which are framed, including the notifications or directions or orders which are issued by RBI. If, let's say, RBI has issued the order of inspection or any change in the provisions, so the Directorate of Enforcement will make sure that the provisions are adhered to. And this Directorate of Enforcement is appointed under section 36, right? Under section 36. Then the central government may also authorize any class of officers in the central government or the state government or even RBI not below the rank of an under secretary. Under secretary. Why? To look into the investigations, to investigate the contraventions. This is given under section 37. So section 36 talks about the Directorate of Enforcement not below the assistant director level. But if the central government finds fit, they can also appoint under secretary level officers from the state government, central government, or RBI, right? So now the central government can authorize any customs officer or the central excise officer, any police officer to exercise the powers and discharge the duties which is given in the section 38. So three sections deal with the Directorate of Enforcement. Section 36, section 37 and section 38. Right? Now when we say that the case reaches the competent court, there should be a time limit within which the case should be disposed of or the order should be given along with the fine and the imprisonment term, right? So the competent authority shall dispose of the petition within a period of 180 days from the date of seizure by either confirming or by setting aside such order, after giving an opportunity of being heard to the representatives of the Directorate of Enforcement and the aggrieved person. We said that every person, they have a right to appeal, right? So even here the aggrieved person, they can have the right to appeal if under the provisions the central government have let's say confiscated the property. So the aggrieved person can go to the uh, court and they can make an appeal against the decision, and the competent court will give their order within a period of 180 days, right? So reasons should be given in writing, then the court will give the order, they can seize the value equivalent which is situated in India, and all of these provisions that have already been discussed. And the order of seizure, when we talk about, with the relevant material, will be placed before the competent authority appointed by the central government, and they shall not be below the rank of the joint secretary, and this will be done within a period of 30 days from the order of the seizure, from the date of such seizure, and any petition will be disposed of within a period of 180 days. All right. Yes. And finally, if any person is aggrieved by an order which is passed by the competent authority, then they may prefer an appeal to the appellate tribunal, which is again designed or set up for the particular purpose. So these are the various provisions of the FEMA Act, right? So all the terms that we have discussed, the important terms, then the provisions, the important sections, how the penalties and fines are imposed, who appoints the authorized persons. These are the important topics of this chapter that you need to keep in mind when you are preparing for your exam. Now, here you have the CAIIB selection batch June-July 2025, which is all in one course, and you will get 250 plus classes from all the subjects, and these will be in your non-banking hours where you will get the basic concept clarity plus advanced preparation, weekly doubt and revision classes as well, plus downloadable study notes, sectional test, case study, numerical based test, because case studies are very important in this particular subject BRBL and other papers as well, plus 20 elective paper tests as well. So if you want to study all of these papers in detail and make sure that you qualify the exam, you can enroll in the course. The details are given in the description box that you can see and accordingly join the classes. So you can also download the PDF. The download link is provided in the description box. So that is all for today. Tomorrow we will start with the next unit. If you have any doubts, any queries, please let me know in the comment section. If you liked the video, make sure that you hit the like button, subscribe to the channel so that you do not miss any updates. So thank you so much for attending and all the best.